Today is Saturday, April 9, 2022. Let's analyze the stock market trading session for yesterday, Friday. This is the S&P 500. It was a very choppy trading session, and for the record, I liquidated my UPRO position, so I'm no longer long the S&P 500. Why? It was a very choppy session. It's not really doing anything, and also, the NASDAQ 100 had a very bearish day, so we'll get to that in a minute. And it's just not doing what I expected it to do. It's having problems getting above the 5-day moving average. Tried it twice already, and even if it manages to get above that, you have big resistance up here. You got these pivot points around 45.30 and 45.40. You got the 100-day moving average and the 10-day moving average. The only way now that I will go long now is if it gets above 45.50, this level. That will get my attention. At that point, I will be looking for an entry point. Here, we're between moving averages. Yeah, we're close around the 200-day moving average, and we're still above the 20-day moving average. But big gap. Gap down opens lower tomorrow, or I should say Monday, and we can quickly dip down to 40 of this level, 44.50. And this time, I don't think it will hold. I think it will dip below that and test this level, 44.30, which will coincide with the 50-day moving average. If you remember when I went long, that was the previous session at the end of the day. That was around that level, 4,500. And then yesterday I sold after the market closed. So it was just below my entry point. For the NASDAQ, it was a different story. So levels that I'll be watching on Monday, like I said, will be this area up here. Very strong resistance. Here, you can probably argue if you're very aggressive that if it dips below Friday's low, probably short with the conviction that this 44.50 is not going to hold, and probably the next stop will be most likely will be the 50-day moving average. But I'm not that aggressive. I'd rather just wait until one of these scenarios play out. 44, 44.30 and 45.50. Up here, would consider going long. Down here, I would consider shorting. So I'm not a bull. I'm not a bull. I'm not a bear. I'm just being a spectator for now. I think anything here in between, we're trapped between all these moving averages, and it can be very choppy. That's not really my trading style. I like momentum. It's like once I buy, keep going in my favor. And if I'm wrong, I want to get stopped out as soon as possible, usually the following day. I understand it could take a few trading sessions before this pattern plays out, but that's fine with me. I just got to be very patient, and I will. For the NASDAQ 100, it was a very bearish day. For the record, I liquidated my position at the end of the day. Why? First, it gapped lower below the 20-day moving average, tried to push above that and failed, and then it closed near the low of the day, sitting right on the 50-day moving average. And remember, my stop loss was just below that point, so I did not get stopped out. I just decided to liquidate my position. One of the reasons, or the main reason, was to just minimize my risk. I don't want to take the risk just in case we open much lower on Monday. So we open lower And at that point, we can quickly, within a minute or two, we can quickly sell off, go much lower. And then at that point, my losses can get out of control. So it will be very difficult for me to manage it if we end up opening lower on Monday. So I decided to liquidate my position, take my loss. So between this trade and the S&P 500, I took a loss of approximately 2/3 of my original risk. So at this point, for me, it's all about protecting my capital. If I see a trade, let me just clear this. If on Monday we, like I said, open lower, I don't think I'll take the trade. Yeah, I'll be tempted to, short, but at this point, I don't really see that scenario. I got to see it in real time price action. If we open higher, say we open higher around here, spend some time, and then dip below today of Friday's low, below 14,300. We dip below, I can see that as a shorting opportunity. To the long side, another level that I'll be watching closely again will be 14,500 above today, above Friday's high and above the 20-day moving average. If that's if it basically the opposite, if we open higher around this area and then push above this level, above 14,500, above the 20-day moving average, then I would consider going long. I would expect this level to be resistance, that high, which will coincide with the 5-day moving average. So if we open higher, then I will probably not do anything. I'll probably just watch. Yeah, but this one is not looking good. If it dips below this level, better not stay too far away from that level. Otherwise, the sell-off momentum can really pick up to the downside. For the Dow Jones, no exception, very choppy. It's still in this range between the 50 and the 100 and the 200-day moving average. This level up here, 35,000. So here, between here and there, very choppy, not doing anything. I would consider also not one of my favorite indices to trade, this one, but if it pushes about 35,000 with conviction, then I will consider buying up here. Down here, it's been very choppy to the downside, so I would probably not consider shorting, but who knows? That is always a possibility. For the semiconductor index, this one has been very weak. It dipped below this potentially thought it would be very strong support. This area here, close near the low of the day, very similar, of course, to the NASDAQ 100. This one has come down too much, I think, too much, too fast. So I would expect a bounce and a little oversold. You can say that. So I would expect a bounce anytime now. I don't really see any strong support. I'll say probably this area here around the whole number 3100 or down here. But really, when it's this oversold, it can find support, a bounce, very random support anywhere, and just have a quick bounce. So I'll be watching this one very closely. I would probably play the bounce. I did mention that here that it looked interesting. Now it's even more oversold, far away from the moving averages. So I will consider an oversold bounce, play an oversold bounce. For the Russell 2000, this one is weak, way below all the major moving averages, below the 50. Well, all these moving averages, I'm not going to mention them. You know, the ones I follow. But it's been finding support. It did not make a new low, not yesterday's low, not even close to yesterday's low. So might be a good support level here around 196.7. And stochastics, which I don't really mention, but is showing oversold conditions. So I would expect a bounce anytime now. However, I don't think it's going to have enough power to push above all these pivot points. Yeah, the pivot points, but get it, above the 50, got the 5, the 20. I mean, just tons of resistance up here. So if that's the case, if we get a bounce, a rally in the market, of course, is going to all the indices will participate. I will not use this as my trading vehicle, either the S&P 500, the NASDAQ 100, or the Semiconductor Index. Thanks for stopping by. And I forgot to mention, this week was very frustrating for me. Very unlikely next week is going to be as frustrating as this week. Again, thanks for stopping by and good luck trading on Monday.